Howdy folks, this is Ryan with TrendLizard.com. I've had some requests to do an update on Cisco. This is something that I've analyzed in the past, and I thought it was worth updating because it's an interesting stock and it is nearing its long-term high, all-time high that was set back in 2000. So it's worth taking a look at. The last time we looked at it, it was back in this fourth wave pullback that happened in 2018, and we haven't changed our labeling one bit since then because it has continued to track as the Elliott Wave pattern has said it would. So back in the early 90s or the late 90s, excuse me, you had that nice advance. It was all part of a trendy 5-wave advance. Since then, it's been in a large pullback. Obviously, it was destroyed in the dot-com bubble, and it has still not managed to fully recover what took place over the course of those 2 years back then. It has been on a steady recovery path since then, but I'm not certain if this is something that will continue for the long term, well, super long term, I guess. It's obviously been in quite the advance over the past 18 years, but I still believe it's a counter trend move, and this is why. The advance off of that 2002 low into the 2007 high was a 3-wave move. Boom, right away. We know that 3-wave moves are counter trend moves that happened against the direction of the dominant trend, which makes me believe that the pullback that happened back in 2000 is not over. Believe it or not, 20 years later, these things obviously happen on all time frames. This one happens to be happening on a very large time frame. Again, you have that 3-wave advance into the 2007 low, and then a 3-wave pullback into the 2007 high, and then a 3-wave pullback into the 2011 low. Since then, it's been in a very nice 5-wave advance that has yielded some serious gains over the course of that time, but it still appears to be a C wave in this advance, an A, a B, and now in a C wave that had a 4th wave pullback in 2019 and 2020 and is now embarking on a much larger 5th wave recovery that is likely to test that 2000 high, at which point that may be the end of the run and you might see a very substantial breakdown from that point. But let's dive in a little bit closer, take a look at this more proximate action. This is what's happened off the 2016 low, so you're talking from here basically to the upside. You can see that all the up moves have been very nice 5-wave moves, which is why it's continued. And here's the key thing to take away. After it completed this 5-wave move in 2019, it gave us a super clear 3-wave pullback. Now this is what tells us that that recovery effort is not over and why it will continue. Because again, we know 3-wave moves happen against the direction of the trend on that time frame. So on this time frame, on the multi-year time frame, we're still getting counter trend down moves, which can only mean that it's going to head higher. Again, per my earlier analysis, I think in the long term it's going to bump its head once it completes this up leg. But that's a story to worry about for another day. Right now, it is still advancing. This appears to be a 5th wave advance that began off the 2020 low and should continue to a new high above the 2019 high before it's over. Let's go ahead and zoom in on this action in 2020. Here it is. Now it's been in a nice advance, looks like a 5-wave advance off of March's low into June's high, and we're seeing this a lot of places. We're seeing a completed 5-wave advance into June's high. It's been pretty choppy since then, but we believe that it's a counter trend pullback that has not yet completed. So if you own this guy, be aware that it's going to pull back. It should continue down, probably into this yellow area. As long as it stays above 38, the lower end of this yellow support area, we're going to expect it to find support and continue that advance as it moves its way back up towards that 2020 high and as it gives us a 5th wave of this nice 5-wave C-wave advance that's been going on since 2011. So that's what we're looking at. We're bullish on it on any shorter time frame, even up to the multi-year time frame. If you get anything longer than that, if you're looking at anything longer than that, we are not bullish. We see the potential for a very large destructive decline once the advance completes. But as is right now, there are gains to be had to the upside as this 5th wave advance off March's low continues to grow from there. And this is all contingent on price staying above 38 at all times. As long as it does, remain bullish and expect higher prices on Cisco from here. I hope that's helpful. This is Ryan with TrendLizard.com. We'll talk to you again soon. Take care.